Let me issue and control a nation's money and I care not who writes the laws. Mayer Amschel Rothschild, the founder of the Rothschild banking dynasty and father of international finance. Money. You can have it or sell a lifetime to get it. Money is everywhere. It is in the chair you are sitting in, on the cell phone or computer that you are using to watch this video. It's on the napkin you blew your nose with, but you ever wondered? Where does the money come from? How is it created? Who controls it? These questions seem simple, but even most economics students and professors don't know how money is created. Nowadays, the way money is created is the main reason why you can't buy a house and get a well-paying job. It is the root of the biggest problems, and it's the main cause why there is so much complexity in the matter of money. In order to hide the truth, this video will explain it to you in a simple way. In our modern economy, we have two types of money, paper money and electronic money, which is the most commonly used today. Electronic money is the numbers that you see in your account or the payment of your card when you go shopping. If we think of money in terms of everyday use, there won't be much difference between these two types of money. If you buy a cup of coffee, it costs the same, regardless of whether you pay with your card or in cash. The difference between the two seems to be more of a matter of preference. However, if we ask ourselves about how money is created, then we will see that there is a big difference. Let's start with paper money. Paper money is created by the central bank in the form of bills or coins. If someone else tried to create it, they would be jailed for counterfeiting. Many people believe that the central bank is the main organization that creates money, but in reality only 3 or 5% of the total money supply is created by the central bank. The remaining 95 or 97% is electronic money created by commercial banks. Electronic money is very intricate. Many people believe that electronic money is just the electronic version of paper money, but that is not true. Electronic money is created by commercial banks when they issue new loans. Imagine that you go to the bank to obtain a loan of euros 10,000. This loan is rarely repaid with cash. When you spend electronic money, you simply transfer it from your bank account to someone else's bank account. And in this process, the electronic money is not transferred on paper, but the transfer is made electronically. When a bank issues a loan of, say, €1,000,000, it means that the bank simply creates and adds that €1,000,000 to the total money supply in the economy. Maybe right now you are wondering where it got that bank from €1,000,000 to be able to lend them. Could it be that there is an army of grandparents and grandmothers who kept all their life savings in the bank? And the bank is using them to make a loan of €1,000,000? Of course not. They only wrote numbers on your account. Step 1, you sign the loan. Step 2, the bank writes numbers to your account. 95 to 97% of the money supply is created this way. I'm sure you're saying, come on, how is that possible? There is no way the bank can just write numbers to my account when borrowing. You may not believe the things mentioned in this video, but here is a quote from the Central Bank of England. Commercial banks create money in the form of deposits through new loans. For example, for someone who applies for a housing loan, they don't do it by giving them thousands of bills, but they credit that amount in their bank account. At that moment, the money is created. You get excited about all the innovative ways out there to make payments like internet banking, payment cards and smartphones. But we have to remember the price we pay for such comfort. We have essentially privatized the creation of money in our society. I'm sure you have heard the saying, money is power. If money is power, then what does it mean to give the creation of this power to the banks, which are organizations with profit-making purposes? I hope you are beginning to see what a big problem it's to let the banks create money. First of all, let me tell you that I don't hate banks, and I'm not saying that banks are the bad guys and bankers are greedy. The main problem here is how much power have we given to the banking industry? Basically, we have allowed them to combine two vital processes, the creation of money and the loan of money. As a result, when banks lend money, they are creating money. It's very important that you understand this part because it directly impacts you. This is the main reason why you can't buy a house or get a good job today. Just like any business, Banks also want to maximize their profit and minimize their risks, which means that they have incentives to lend money to certain sectors that are less risky. And do you know which is the least risky sector for banks? The real estate sector. For banks, it's risky to lend money to small businesses because there's a high probability that it will not be successful, but mortgages have security if the borrower can't pay. The bank takes the property to cover their losses. How does it make sense for banks to lend money through mortgages? The newly created money flows into the real estate market instead of other sectors that society needs, such as renewable energy, creation of new businesses, schools, hospitals, and so on. At first glance, it may seem that society benefits from cheap mortgages, but it doesn't. Imagine that on Christmas Eve, Santa comes and doubles the amount of money in the whole world. If you had euros 10,000 in your account, Santa would make you have 20,000. Suddenly everyone feels rich and runs off to the shops to spend money. Do you know what will happen as the days go by? Prices will start to rise. As prices rise, no one will benefit from such a sudden increase in wealth. Having access to cheap mortgages works the same way. Home prices will get higher and higher. The common belief is that house prices go up due to immigration, population growth, and the decrease in the number of new homes built. Although these factors actually play a role, they aren't the main reason for the rise in house prices. The biggest reason comes from the impact of the increase in mortgage loans in a period of 10 years between 1997 and 2007. In England, 40% of the money just created went to the real estate market, 37% of the financial markets, the 10% of credit cards and personal loans, and only 13% went to business loans that benefit the economy. That is why, on average, each year home prices rise 7.7%, while wages increase only 0.8%. These numbers are for the UK, as the author of the books I have used to create this video is from the UK, but the situation is very similar around the world. As you can see, almost 80% of the money went to non-productive sectors that don't benefit the economy or job creation. As a result, no new jobs are created and unemployment increases. For example, in Italy 40% of young people under 25 are unemployed. In Spain it is 56%, and in Greece it is 60%. This is nothing more than a massive waste of talented people who want to do something useful, but cannot simply because of how money is created and distributed in the modern monetary system. So if you want to solve the problem of housing and unemployment, you have to see how our money is created. As you have just seen, a large part of the newly created money doesn't flow to the economy, but to the real estate and financial market. Inflation is created in the direction where money is flowing, which is why home and stock prices are rising, while the rest of the economy moves like a turtle. Years ago, a family member worked, and he could only support the family and buy a house. But today the two members of the couple work, and despite that they can't buy a house. Many young families who qualify for mortgages can barely afford their regular expenses and mortgage payments. What will happen if interest rates go up? Well, the bank will kick them out and take them home, but here's the biggest question anyone asks. What did the bank do to have the right to take the houses away from these families? If what they did was write numbers on the screen, this is why mortgages are the best-selling product on bank shelves and why it's a bad idea to let banks create money and control it. Instead of getting excited about all these new electronic forms of payment, think for a second and ask, who really benefits from it? Like everything, it's electronic. Banks are closing their branches, they are closing ATMs, they don't need to hire personnel, they don't need to buy armored cars to transport money. All this translates into lower costs for banks, in addition to the massive profits that they get by creating money out of thin air. I would like to talk about 3 more problems that our banking system has, which are inequality, instability, and the accumulation of power in the hands of a small group of people. Let's first talk about instability, the way banks lend money. It's very similar to an umbrella shop that sells umbrellas when the sun is shining, but when it starts to rain, the store closes. When the economy is booming, stocks and house prices start to rise. At that time, banks are interested in creating new money and lending it to the economy. However, that inflates the prices of the economy even more. As we know, Ultimately, these bubbles burst and a crisis occurs. When crises happen, banks become reluctant to create money and lend it in the economy, and this, in turn, makes the situation worse. Banks actually benefit from creating money when we don't need it, and they retain it when the economy really needs it. The second problem is inequality. As we all know, when we borrow money we have to pay interest, and we can think of this interest as a kind of tax on the money. However, this tax works contrary to normal taxes in the normal tax system. The higher you earn, the more taxes you pay. However, in the banking world, the more you earn, the richer you are, the less taxes you will pay. In other words, the richer you are and the more active you have, the less interest you will pay to the bank. On the other hand, if you are poor and have little money, you will have to pay a high interest rate. The way in which money is created is a clear explanation of the inequality in our society, and because these continue to increase, the same inequality also applies to countries. We see that some countries pay high interest rates, therefore they get poorer and poorer, while other countries get richer and richer and pay lower interest rates. The third problem is about power. If you can decide when to create money, if you can decide how much new money to create, if you can decide the interest rate to charge, if you can decide for what purpose to lend money, then you have enormous power over others, and this power is not only over the economy, but also about society. By privatizing the creation of the new money, we have essentially handed over a very vital power to the banks, which is why many politicians today seem very powerless, because crucial decisions aren't made in parliament, they are made in the boardroom of the major private banking corporations. We need to start questioning the power we have given to the banks. We have to start wondering if we really need a big banking industry, while other sectors like healthcare to schools and small businesses suffer. One of the common things I hear a lot is that debt is bad, but money is good. People want the money, but not the debt. They don't understand that this is not possible in the current system. Money equals debt. If we want more money, we have to borrow more. If no one will go into debt, we wouldn't have money in the economy. If there's no money, spending will decrease. And when spending goes down, basically the economy goes down. You hear on television that politicians talk about paying off debt, but they don't realize how ridiculous they sound when they make these statements. Unfortunately, most people believe them because they don't understand how money works. We spend our whole life trying to earn money, we use it every day, but we aren't informed about it. People don't want to talk about it, they think it is taboo, they think that money is bad, money is only money, it is neither good nor bad. Saying that money is bad is like saying that pizza is bad. I hope this video has helped you a little better understand where the money comes from. If yes, share it with at least one friend who can also benefit from this knowledge. Today we have so many problems simply because of our ignorance about money. I believe that if enough people are informed, positive changes can occur. If you want more information about the modern banking system, I recommend reading a book called Modernizing Money. I have used that book and resources on their website to create this video.